Hi there, welcome to Kneppy Invest and welcome to another ASX Daily Rundown video. I just recorded another video on Can Group because in my last or previous answer and reply video, I completely went past one question on a company called Can Group, and that person, I think it's the same person or same viewer, wrote another question in yesterday's ASX Daily Rundown video about Can Group. And I thought instead of including Can Group in next week's or this Saturday's answer reply video, I'll do a standalone video on that particular company as sort of an apology to whoever left that particular question in last week's video that I completely missed. Anyway, a really interesting day on the market. So we are down big, but when I started recording that previous video on Can Group, the ASX 200 was down over 2%. Now it's only down 1.75%. So a little bit of a rally in the last 20 or so minutes. Small ords down 2.4%, tech down 1.5%, even the mining sector down 1.9%. So everything has been hit hard today. However, in saying that, a few of my companies are up. Southern Cross Engineering's up, Metal Rock is up, which is a company I bought just the other day. So some companies have done all right today. And some companies have done awfully today. So what I'm going to do today in today's video is look at, just like other ASX Daily Rundown videos, have a look at what's performed well on the market today. I'd say all sectors are down, all indices are down as well. And then we'll go through some of the interesting announcements today. And they include Southern Cross Electrical Engineering, Pantoro. We'll look at this company's Appendix 5B. Also have a look at Decil, McMahon, and a company called Locality PE. Oh, what's that company called? Locality Planning Energy. And I'm grouping those three companies together for a reason, and that reason will become clear. And then I was going to call it XRF, but it's XRF Scientific. That company and Southern Cross released something today that was beneficial. Well, I'm hoping it's beneficial for XRF Scientific. Let's see, the share price is still up. It's still up. Not quite like Southern Cross Electrical Engineering. Share price is up 5% for that company. Anyway, and I do own both of those companies. So I'm a little bit biased when it comes to those two companies. And then based off which company has performed best today, I'm either going to look at a company with the ticker code DAL or a company with a ticker code WMG. I think WMG is Western Mines and DAL is, I have no idea actually, Dalaroo Metals. And there's a reason behind that, and that reason will become clear when we get to it. Now, some of the other companies that did release announcements today that I'm going to bypass include Cooper Energy, Hubbard 24, Navigator, which is global investments. They released their funds under management or assets under management today. That was a potential, probably would have come in number 6. So if I was looking at 6 companies, that would have come in next. And Zip. However, even though I'm leaving out Zip, I'm going to look at the chart for that company. In fact, I'm going to look at the charts for Navigator, Image Resources, the company between DAL or WMG that I'm not going to have a look at, FND, and then Zip, and also the XJO. Hopefully I won't forget the XJO, but I want to have a look at the XJO because possibly it's bounced off a support level. And maybe that's good. So anyway, although just by looking now, it's dove a little bit. Okay. So let's have a look at what's happened on the ASX today. I'm recording this video at it was about 3:15 when I started recording because that original video went for a little bit longer. I thought it was going to be like a 10-minute video, but there's a chance it's going to be more like a 20-minute video. And I want to start recording this video just after 3 p.m. So let's have a look at the end. Actually, before I talk about the ASX, why are we down big? Well, you know, what they say is, well, it's a wrong. That's my previous video just rendering in Zoom or converting in Zoom. Sometimes it takes ages, but I want to start recording this video a little bit earlier, or I didn't want to wait for that to convert. Anyway, so NASDAQ down 1.6%, Dow Jones 0.65%, and S&P down 1.2%. So why were those 3 American indices down? Now, the best reasoning behind it, hopefully it's got it here, retail sales. So this is the explanation for why the American market's tanked. Retail sales. You might be saying, well, retail sales were weaker than expected. No, they were far stronger than expected. Isn't that absolutely crazy that retail sales were stronger than expected, yet the stock market tanked? That just tells me the market is stupid right now. It's absolutely stupid. The market is obsessed with interest rates, way too obsessed. There's a good reason why we might not have to decrease interest rates, because the economies in the world, the American economy, Australian economy are doing way better than expected. That should be beneficial for the markets. Now, if we see a significant decrease in the health of the economies, that's bad for the stock market. Interest rates might decrease, but companies' profits might absolutely plunge. So retail sales month on month, actual 0.7, forecast 0.3, previous 0.9. So it's the difference between the actual and the forecast, which spooked the market. But still, it absolutely fascinates me that the market is concerned about this, because it means interest rates more than likely won't be dropped as much as they thought they would be earlier. And I keep saying, sometimes when interest rates fall significantly over a short period of time, it's a bad thing. Sometimes interest rates dropping and stock market dropping move in the same direction. It happens a lot during recessions. Interest rates fall, stock market falls. They happen at the same time. They occur at the same time. Hopefully I said that right. And sometimes when the economy is booming, you might see interest rates rising, and at the same time, stock market is rising. So there's this belief that there's a correlation, a sort of a negative correlation between interest rates and the stock market. It's not always true. It sometimes happens, but it's not always true. I'm pretty sure I pointed that out in previous videos. Anyway, so that's why there was weakness on the American markets. Funnily enough, before I go to bed, I have a look at the futures. The futures were up. NASDAQ actually opened up 0.5% higher. So it went from being up 0.5% to being down 1.65%, all because, again, of retail sales. And if you do have a look, there we go. So what I usually do with this is I just rename it. So I'm just going to rename this video. Oh, don't. Oh. I'm just going to rename it Can. And then I move it into the desktop. That's it. Okay, so I won't go into a technical analysis of the American indices, but I will have a look at the XJO as we move to the chart portion of this particular video. So that's why we're down today, because retail sales in the Americas, or North America, well, actually just USA, were better than expected. Isn't that just crazy? It means the economy is better than they thought it was going to be. Well, maybe. That's just retail sales. Anyway, it also means that inflation looks like it might be a little bit stickier. Maybe. Anyway, let's have a look at the sectors. They're all down big. Big. Telecommunications not as down as much, and discretionary down a lot, minus 2.3%. Although you might say, well, the United States retail numbers were better than expected, which means that could equate to better than expected retail sales in Australia. So why is discretionary the worst performing sector? You might be able to argue that should be the best performing sector, because retail companies might be performing better than we might expect. The economy is healthier. People's balance sheets are healthier. They're still out there spending. So why is discretionary the worst performing sector here? I can understand real estate, because that's dependent on interest rates, and I sort of understand every other sector. And I doubt we have any good indices today. I'm assuming every single index is down. Yes. Worst performing sector or index is emerging companies and then small caps. And they do usually perform worse because people panic, particularly those people who invest in those areas. They panic. Particularly when it comes to their small caps. They sell out of small caps and go to defensive, like Woolworths. So let's have a look at the ASX 200 or 20. Now, have a look at the ASX 20. Where is it? Or maybe I have to have a look at the... Where is it? ASX 20. There it is. XTL. Still down 1.9%. So let's see if any of these offensive companies did okay today. Yeah, WiseTech I wouldn't say that's defensive. Telstra I would say that's a little bit defensive. Woolworths is defensive, and they're down, or they're two of the best three performing companies in the ASX 20. I'm not sure about WiseTech. That's weird. And the worst performing company in the ASX 20 is Rio Tinto, then Fortescue, which is iron ore. So iron ore must not be doing good. All right, so next thing I'm going to look at is some of the announcements. So we're going to look at those 5 announcements, including 3 companies combined in the one, and then we'll have a look at 4 Appendix 4Cs. I forgot to mention this. We'll have a quick look at 3 Appendix 4Cs that were released today, but we can move on from those 3 Appendix 4Cs fairly quickly because I had a look at them and then I bypassed having a closer look. Although one of them may be because I should have had a closer look because they were operating cash flow positive. So let's start off with Southern Cross Electrical Engineering. If you do follow my Twitter, I forgot to send out some tweets today. I was about 1 hour before trading began. I was like, no, I'm bored now. These announcements coming in slow. What should I do? So I had a shower. I should have been tweeting. Anyway, so Southern Cross Electrical Engineering, is that to up 5.3%. Go Southern Cross Electrical Engineering. They released an announcement: data centers and buildings awards circa 50 million. I'm not even going to open up this particular announcement. The whole reason I bought Southern Cross Electrical Engineering is because they're in the right space. They're in the right sector. Data centers. So they don't build data centers. They sort of are the picks and shovels for data centers. They provide the support when data centers are being built because they're Southern Cross Electrical Engineering. So I am opening up this announcement. So I am a liar. So SCEE Group. So one of their subsidiaries has been awarded a Multiplex Constructions Pty Limited, the electrical design and construct works for separable portion 17 stage 1 phase 2 of the next DC. That's why I like this company, because of data centers, and they're in the right space. Data centers are a booming area. What was it? Amazon said they're going to spend $200 billion, something ridiculous, on data centers. So data centers is the place to be because of AI, and AI is the next significant thing that's going to happen to humanity. Very bullish on AI. It could be the most important revolution humanity will ever see. I think our lives in 20 years will be significantly different than they are now because of AI, and data centers and AI go together like peanut butter and jelly or jam. Anyway, maybe I'm a little bit too bullish, but if we have a look at this company, Southern Cross Electrical Engineering, or SCEE, share price in a beautiful uptrend. So I bought at $1. I started following this company a little bit before that, and I could have bought at just above 80 cents, but I waited a little bit too long. I bought at $1. They released something pretty good in March, and then the share price just went sideways for like 3 days and went, yep, no selling. I'm going to buy at $1. And yeah, share price has now increased by about 20% since then, in a beautiful looking chart. And when the share price is up 5%, when the overall market is down 2%, you are going to take that every single day of the week. So excited to be a shareholder of this company. Now, I do have this in my trading portfolio, and I do have a sell price at 95 cents. More than likely, I will lift that. In fact, I'm going to lift that to $1. So I will become a little bit bearish if the company share price falls below $1. Even if it falls below to like 98 cents, I'll probably hold on still because I would expect a little bit of toing and froing if it falls to $1. But at this point in time, I'd love to see the share price just go sideways like it did when it got to $1. I wouldn't be surprised to see a little bit of pullback towards $1.05, between $1.05 and $1.10. So bullish on this company for the long term. We'll say medium to long term. So you might say maybe this company belongs in one of my other portfolios, but I am more likely to trade smaller cap companies now than I was a few years ago. And in fact, my small cap portfolio is doing really well now. In fact, it's doing better than my trading portfolio over the past few weeks, because of companies, not this company, but companies not like this company, but other small cap companies actually doing fairly well. Well, in my portfolio anyway. Okay, let's have a look at Pantoro, a company I haven't had a look at before because this company is a mining company that's in production. Okay, so it's down 2.5%. Pretty sure this is gold. I'm pretty certain this is gold. So why am I excited about Pantoro? I did tweet this company as well, and you'll be able to see why I'm not bullish, but why I like this particular report. So this company does, I do have this company on my spreadsheet, but I'm not going to show you that. But first, let's just go to their Appendix 5B, the quarterly cash flow report. Down here, there it is. Okay, so receipts to customers, 57 million. Operating cash flow positive, 3.4 million. They're not free cash flow positive if you include the other non-current assets, mine capital development, which was 6.7 million. But a substantial improvement from the first 6 months of the year, based off the year to date. Receipts to customers, 151 million, and operating cash flow negative. So I wanted to find out why the company's operating cash flow has improved significantly from the first 6 months of the year. And that's where this company does look interesting for one reason and one reason alone. And we have to go all the way back up to look at the highlights section. Key highlights. And there's one key highlight here that I really want to focus on. In fact, there's a couple of key highlights here. The first one is really, really important. And I'm glad and happy they had this as the first highlight, because this is, my opinion, the most important highlight or thing about the whole report. So record production of 8,298 ounces. That's not what I was interested in. At an ASIC, or all-in sustaining cost, of 1,850. So just keep that number in mind. This is for the month of March, 1,850. Positive cash flow for operations of $6.9 million in the month of March. So again, month of March. Remember, for the quarter, it was 3-point-something million. Month of March, 6.9 million. So straight away, when I read that particular highlight, I was like, oh, what's going on here? Okay. So EBITDA of the quarter, 15.6 million. But here's the next thing. For the quarter, all-in sustaining costs were $2,561 per ounce. Something happened in March where this company significantly decreased their costs. This needs further research. I was looking for some other sort of indication that these sort of costs can remain where they are now, because maybe this is just a 1 month thing. Maybe for the March, the costs were really low and they're going to go back up to, say, $2,500 or even $3,000 an ounce. And if they go back up to $3,000 an ounce, that's not that sustainable. In fact, I went back to last quarter's Appendix 5B, and there was no mention of all-in sustaining costs that I could see, although I did go through it fairly quickly. Now, I'm pretty sure they do mention something about costs somewhere here, because I went through it fairly quickly and I was looking for any mention of costs, and I'm going to not find it now, would I? Yes. Okay, here it is. They do talk about costs here, just below that, so like the fifth or sixth statement here. Site costs continue to increase. The cost reduction is an outstanding result. Tick. And the mobilization costs associated with change in open pit contractor, and a further $840,000 was spent. So they did spend some money on costs, and maybe those are one-offs. But the thing I wanted to find here was any sort of guidance for future costs. Do they expect costs to remain at these levels? And I don't think I could find it anywhere here. So maybe I'm completely wrong, and maybe I'd have to do a little bit more research. But really intriguing report from Pantoro, particularly how they performed in March. And if this company continues like they performed in March, this company should be generating a significant amount of cash. So $6 million in 1 month. So if we say, and gold remains up, or if gold can continue to climb, this company would be generating even more cash. So say about $20 million of operating cash flow in 1 quarter. Now, the other thing I should look at is the markup. So if this company had a market cap of, say, $100 million, ooh, wow, they don't, but a market cap of $403 million. So there is a little bit of, so I wouldn't necessarily say this company is really cheap. Do they have any debt? That's the other thing. I actually didn't have a look at the debt. So we can see that together. Go to section 7. Here we are, 64 million, or about $65 million of debt. But if they are generating cash flow, they'll be able to pay off their debt fairly quickly if things stay where they are now. So if you know a little bit more about this company, and if you know a little bit more about their costs and the cost base and what they expect in the future, I'd love to hear your thoughts, because I will try to find anything I can about Pantoro moving forward. So let's have a look at the chart for this company. This is the last thing. Is it bullish or bearish? Share price down a little bit today. Ooh, oh, sentiment in this company has turned and turned really nicely over the past 2 months. In fact, the last month and a half. Look at chart, ugly looking chart for Pantoro from 2022. Share price was significantly higher in the 30 cents range, went all the way down to a low of 3 cents. Share price decreased 90% in a short period of time. But sentiment is definitely changing for this company. I wouldn't be surprised if this company did a pretty significant capital raising in the last 2 years. But sentiment is definitely changing. A little bit of a pullback. I'd love to see the share price fall below 7 cents. Oh, this is intriguing. I'm going to definitely put this company onto my buy Australia watch list for a potential buy in the future, particularly how sentiment is shifting. I think there is a breakout happening with Pantoro right now. Last time share price was this high, even though the share price has pulled back. I'm not going to include the share price in the last 2 days. Last time share price was at 8 cents, was back in July of last year. So we're at a 9-month high. Okay, let's have a look at Decil, McMahon, and local planning. I think it's locality planning energy. Okay, Decil up 63%. Oh, what's happening here? No, it's an acquisition. They've been taken over by McMahon. Hence, why I've included McMahon in this particular this part of the video. Okay, so obviously I'm not going to have a look at yes, you will. So I'm assuming the offer price is around about 30 cents. If it's anything over 30 cents, that could be intriguing arbitrage, possibly. So it's shown on 30 cents, which was a pretty nice premium. So I would say long-suffering Decil shareholders would be very happy, maybe, about this takeover bid, unless they're really long-term shareholders, and you're going to see why in a second. Now, I think Decil is a horrible company. I think this is one of the lowest quality companies you can find. And there's a reason behind that. So let's have a look at why I think this is a horrible, horrible low quality company. And I'm a little bit surprised McMahon wants to take over this company. So let's have a look at their financial report. Yeah, their half year financial report. This should give us enough ammo for me to say this is a horrible quality company. Okay, so revenue. $215 million of revenue in the last half year. Cost of sales $203 million. So straight away, this company is existing on really low gross margins, really low gross margins. So we're talking about what, 5% gross margins? That's horrible. That's horrible. Straight away, that's horrible. But then administration expenses, $14 million, which is more than the gross profit. So the company is actually non-profitable. Total equity, $62 million. And if you look at the operating cash flow, negative 9.4 million. Last year it was negative 6.3 million. Now, maybe I'm being unfair on the company. However, in saying all that, I would say the market cap of this company is really low. I'd say 30 million. Well, it's now 44 million. Yeah, it's up, 64%. So it was even lower than that, because if the market cap is 44 million and the share price has increased 65%, yeah. Anyway, this company, I've been looking at some of the announcements this company has released over the past, say, 3 or 4 years, and it's a very unimpressive company, in my opinion. Now, what's happened to McMahon? I would not be surprised if the share price of this company has plunged. Maybe not plunged, but fallen a fair bit, because I don't think this is a good acquisition, to be honest with you. I just think that they have released a presentation. I might have a quick gander at the presentation. So McMahon, down 4%. Let's have a look at the presentation. Try to understand. They're probably going to talk about synergies. They could eke out much more profits, increase the gross profit of Decil. I'm not sure why they're acquiring this company. Not sure, but they have found something. Here we have strategic rationale. Let's see if they say synergies. Okay. Represents a significant milestone for McMahon in accelerating civil infrastructure growth. Well, they might increase their revenue growth, but just because you increase the revenue growth doesn't mean you're going to see increasing revenues. Here we go. Synergies. They've mentioned it. Okay. Earnings accretive pre-synergies with future cash flow generation to drive growth initiatives and achieve McMahon goal of exceeding 20% return on asset return, ROACE. Return on assets. I want to Google that. C. So assets, E is equity, and C is capital, of course. Oh, return on average capital employed. I haven't looked at that metric all that often, so it's interesting that they've used it. Maybe this sort of industry uses that as well. And we have another one, cost synergies of circa $5 million per annum. So whenever you see an acquisition, the company that's acquiring the other company will always say synergies. And again, a lot of acquisitions are not beneficial for shareholders, particularly if it's a larger company. And synergies don't work sometimes. Anyway, so not impressed with this acquisition of McMahon for Decmil, but I would suppose you are excited if you're a maybe if you're a Decmil owner. So why have I included locality, planning, energy? So we're talking about acquisitions, and share price of this company is up 40.7% because there is an unsolicited takeover offer for the company, and more than likely the takeover offer is, say, about 8 cents. Let's see if I'm right. Share price now 7.6 cents. You always see a little bit of a difference between the takeover price and where the share price is trading because there has to be some sort of discount because of the future. There's also a risk, and also the future. So takeover bid is 8 cents. Yeah, there we go, 8 cents. Do I like this company? No. I've been following this company for a long, long time, and yeah, there's no reasons to like this company. I don't know anything about River Capital. Why would they be taking over this company? And take no action. So the management of the company says take no action. Some shareholders have taken action. They've sold. I would sell too if I was locality planning energy. Yeah, anyway, I'm not interested. So let's have a look at the charts for these three companies. Let's start with Decmil. Well, it's consolidating. Share price going sideways. But look if you go to the past, look at it. Oh, geez. Share price fell from like $3, $3.80, all the way down to a low of like 10 cents. 10 cents back in 2022. But if you go back further, I think the share price was significantly higher than this. Yes. Share price is $15 back in 2011. It's an ugly looking chart. Again, this is especially a good sign that this company is low quality, just by looking at the chart. Share price going from the top left to the bottom right. That is an indication of a low quality company you don't want to be owning for the long term. And if you've been holding Decmil during this consolidation period, so for the last 2 years, you're probably happy right now because this is a high, 28 cents. We did see the share price of the Decmil get to 28 cents back on the 7th of February 2023, but this is the high, 2-year high, or 2 and almost half-year high. So many shareholders will be happy with this takeover bid. McMahon, I always thought McMahon was a drilling company, something to do with coal, but I was wrong. Chart looks actually pretty good. Chart looks pretty nice. Definitely an uptrend. You can see share price moving up and down in waves. Do I have to say up and down waves or just say waves? I can see high highs and higher lows. That's exactly what you want to see. Not sure about the quality of this company. I'd say it's probably a low quality company. It's mining services. The majority of mining services companies are fairly low. Market cap 500 million, dividend yield 3.7, price earnings ratio is 7.3. Revenue of, well, this company exists on really low margins as well. Revenue of almost $2 billion, profit of $57 million, net margin of 3%. Anyway, but the chart looks okay. So this chart actually looks pretty nice, really. So have a look at the weekly chart for McMahon. Okay, so short-term uptrend, that's about it. In fact, if you look at the longer-term chart for McMahon, and just like Decmil, it was significantly higher back in 2008. Anyway, not a big fan of these two companies, just like I'm not a fan of this one. Locality planning, I have a feeling this chart is going to look absolutely horrible. Yep. There was a nice little pop-up in share price on the 28th of March. Share price rose 70.6% on that day. What date was that again? That was the 28th of March. What happened with LPE on the 28th of March? Nothing. Did I get the right date wrong? Why did the share price increase significantly on that day? There's nothing here. That's weird. Did I get the date wrong? Can't. 28th of March, 2024. 28th of March, 2024. There's nothing here. Did I meet 28th of February? No. I have no idea. Anyway, maybe there was rumors about the takeover, and that's why it popped up, because that was not that long ago. Anyway, so no fans of those two companies. And finally, we're going to have a look at either Dow, I forget the name of that, was it Dalaroo, or Western Mining's Group. And to decide which company I'm going to look at, let's have a look at the 50, not 52-week highs. Top gainers today. Both of these companies should be near the top. Dalaroo is the top. Decmil is second. Decmil PE, something PA. That must be, I don't know what that is. Locality Planning is fourth. Horson's Mind and Western Mines is fifth. I had no idea there was going to be a significant difference between Dalaroo and Western Mines. I just knew both companies' share price would be high. So let's have a look at Dalaroo Metals. Market cap of this company is 2.3 million. Share price down 53% in the last year. Share price up 75% today. Why is the share price significantly higher for Dalaroo today? Let's have a look. Gold system discovery at Lions River. I am not going to open up this, and actually, I will. I lied myself. I was lying. I said that when I was opening up the announcement. It's a definition of a lie. I have never heard of this company before. These strikes don't look anything amazing, to be honest with you. That's me and my lack of experience reading these drill hits, or whatever you want to call them. It doesn't look that interesting. So the first thing I look at is the length. So there is a 19 meters, but then the grade of gold in that 19 meters was what? Whenever I see a length, say 100 meters or longer, and then the gold, if it was 2 or 3, I'll be like, whoa, that's pretty good. So I am not an expert. I'd say the market is a better expert than me. So let's have a look at the chart for, what was it? Dow. I put Dow here. Dalaroo. Is there any reason to get excited? No, we already know the share price is down 53% in the last year. So the share price more than likely was going to be in a downtrend. And in fact, the share price is down from open. Share price opened at 4 cents. Now the share price is 3 cents. Opened at 4.1 cents, went to a high of 4.5 cents. Now it's 2.5 cents. Share price at 56%. We have seen selling coming in. Not even sure why I even thought about looking at this company. No reason to get excited just by looking at the chart. Good volume coming in, but we have seen selling. And the reason we are seeing selling in Dalaroo Metals is because the share price is in a downtrend. There's many shareholders who bought into Dalaroo in the past who are now in the red and have seen the opportunity to sell out. That's extra supply of shares on the market. We don't have enough demand. Hence, if you have supply beating demand or greater than demand, supply is going to win. Well, supply is won, and that means share price should decrease. It's natural supply and demand. That's why I always look at resistance levels. A lot of resistance for Dalaroo. So you won coming in number 5. I did not have a look at XRF Scientific. Did I? Completely missed you. That's terrible. I'm sorry. XRF Scientific. I'm getting confused with XRF, which is the resume checking company. They're very similar. They both got X. Okay. So share price now down for this company. They did release a trading report, okay, this was an okay trading report. To be honest with you, if you compare this trading report to the last one, revenue was down a little bit, if I remember correctly. Profit may be down a little bit, but I do like to compare to the previous corresponding period because it takes away seasonality. I'm not sure if there's any seasonality in XRF Scientific, but things are moving in the right direction. So revenue up 13%. Profit before tax up 13%. And if you look at the year to date, revenue up 8%, profit before tax up 14%. So everything's moving in the right direction and all divisions are performing well. So no reason to get bearish on XRF Scientific. So let's have a look at the chart. I was hoping the share price would be up a little bit, but it's okay. It's okay. And the reason I'm okay with that. Is the share price is looking like it wants to move into an uptrend. Share price has been going sideways for just over 1 year. And I own this company for the long term, and I don't care if the share price goes sideways like this, unless they release something that's really negative. That's when I might sell, or that's when I will sell. I have no other reason to sell, but I was liking the chart over the past month or so. Looked like it was wanting to move into an uptrend. If the share price gets above $1.28, that would mean the share price is at least a 6-month high. So for trading concerns, that would be pretty good. And I was hoping this would be a breakout, probably the best way to say it, but not really. Anyway, so those are the 5 announcements of the day. If you want to have a look at Cooper Energy, up 24, WMG, Navigator Global Investments, or Zip, they released other announcements that did not quite make it into my top 5. Now let's have a look at charts. And we'll have a look at WMG because that almost was featured in my video. They also released an announcement that caused a little bit of excitement. I think it was gold results there, assay results, nickel and copper. I saw that and went, oh, I can sort of understand. They also released something on the 10th of April. So let's have a look at the chart for WMG. And this one looks better than Dalaroo, to be honest with you. Some good volume coming in. In fact, we have seen really good volume in the last 4 days. The last time share price was this high was back in December, so we're not quite at the 6-month high. If we didn't have this little spike up in the share price back in December, say just remained as downtrend, I'd be more bullish on this particular chart. I'm going to actually put this. Sorry, Western Minds, you're actually better than Dalaroo. I'm going to put this into my buy Australia. It doesn't mean I'm going to buy, but I'm going to keep a closer attention. There has been a little bit of selling in this company today. Share price went almost to 35 cents. But when you're up 36% and the overall market's down, you are going to not complain. Market still not down 2%, so a little bit of a rally. Maybe we're expecting a good overnight day on the American markets, which wouldn't surprise me when rationality comes back into vogue. Who knows? The market can remain more irrational. The market can remain irrationally longer than you might think. And right now, I think it is acting irrationally, particularly if it's sold off on retail. It's just irrational. I could understand it, but still irrational. Okay, so charts, further charts. Sorry, viewers. What shall we start with? Image Resources. I've taken a position in this company today. Image Resources, because chart looks okay. Share price up 4.3%. I bought it 9.5%. I should have bought it 9 cents. That was a trigger here. So the share price up. I think I've mentioned this company in a few other videos. On the 8th of April, share price rallied 15%, and then share price went sideways for the next 3 trading days. That's a good sign. There's no selling. And then share price rallied on the 12th of April, another 8%, and share price going sideways again. This is a really good looking chart. Really good volume coming in the last month and so. Yeah, exactly the last month. And it's based off some news flow from the company as well. So this is a really good looking chart, and that's why I've taken a position in Image Resources. And last time share price was this high was back in September. So we're at a 6-month high as well. I'm calling this a breakout. And that's why I've taken a position in the Image Resources. And when a company can show the strength of up 4% on a day when the overall market is down, that's a good sign as well. Image Resources. I should have started with the XJO, shouldn't I? So the XJO. Oh, it has. Okay, so let's have a look at the 5-minute chart. It's bounced. And this is exactly what I wanted to see. It's bounced. Not a good looking bounce, but the support level for the XJO was around about 7,610. So we're in a support zone right now. It fell through it at about midday, went as low as 7,590. Then we have seen a bounce. And right now, the XJO is right on that support level. Now, if we have a bad day on the American markets overnight, we probably will see a break. And this will be bearish for the XJO. But I wouldn't be there, wouldn't be absolutely bearish right now, but this was possibly looking at a really bad one-day candlestick for the XJO. So a bad-looking candlestick, a bearish-looking candlestick is when the share price opens at the high of the day and closes at the lower day. That is really bearish. On the flip side, if the share price or whatever you're looking at opens at the lower day and closes at the high day, that's bullish. Sort of like we saw back in December. We had quite a few bullish days on the XJO. A lot of days are quite bearish if you do look at it. So we had a bearish day on the 11th of March, down 1.8%. That on that day, the indice did close near the low of the day. Yeah, so if we do see bounce, like here, on the 15th of March, we saw a bounce during the day off the support level. That's bullish. And then we saw the XJO got a nice little tear over the following 2 weeks. Anyway, I want to finish the video by 4 p.m. Okay. NGI. So they almost made it to my announcement part of the video, the top 5 announcements of the day. This chart actually looks good. I actually do like this chart for Navigator Global Investments. Yeah, nothing wrong with this chart at all. That's the daily chart. Weekly chart, share price has been significantly higher in the past. So this goes back to 2018. That was a share price high. And just based off the weekly chart, things do look like they're moving in the right direction for this company. And pretty big volume coming through as well. Some pretty good volume coming in on the weekly chart. Why is that not updating? Anyway, so it looks pretty good. Looks pretty good for Navigator Global Investments. We'll have a look at FND. So this is an interesting one. This one I was following today. The main reason was we saw massive amount of volatility in the share price of FND today. And it has recovered a little bit. Share price opened at 312, went to a low of 234. So the share price was down about 25%. Now it's back up to 272. I'm not sure what happened. They did release an announcement yesterday, but it was not a bad announcement. Look at that. So selling happened straight away on open. Why is the volume not updating? It's annoying. This has happened a few times now with TradingView. You can see the volume is really small. That's because the volume's not changing when I look at, or the settings are not changing from when I go from a weekly, monthly, daily, or 5-minute chart. And you'll be able to see it if I look at a 5-minute chart now, maybe. No, I think it's set to the daily chart. Oh, there it is. Yeah, 5-minute chart. For the wrong company, though. FND. Yeah, so when there was a bit of a sell-off, we saw some really large volume coming through. So I think that could be a fund manager or someone selling. And the selling just stopped near the bottom. And then we started to see buying. That's why the share price rallied. The volume has not been as high, and it's been dropping. That's one concern. As the share price goes higher, the volume has been dropping. I'd like to see some good volume coming in. The 5-minute chart looks fairly bearish, but maybe now's the time to sell, take profits with FND. That's one thing I'll have to think about moving forward. And since I am on the 5-minute chart, let's have a look at Zip. They did release their quarterly results or something, a quarterly update. And this was another occasion where the share price opened higher. So yesterday, share price closed at something like $1.30. Share price went up to a high of about $1.39 this morning, and then the selling came in. And we saw consistent selling through the day. Share price now $1.17 has fallen through a support level. So $1.19, we'll say between $1.20 and $1.90 is a very important level. This could be a very bearish candlestick. If you have a look at it, very bearish. I put that 27th of February for my tweet. I also tweeted Zip. So this could be a fairly bearish one-day candlestick. We saw another fairly bearish one-day candlestick on the 28th of March. So that's 2 in the last 2 and a bit weeks. So maybe the good times have finished for Zip. Tomorrow is going to be very important. If we have a really good day on the American markets, maybe we'll see Zip go on a nice little rally. And maybe this will be a false break. Anyway. So that's all I have for today's video. If you have any questions, any thoughts, in fact, I'm just going to have a look at Zip because this is 20-minute delayed. So $1.18, still $1.18. Okay. So if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. And the time is now 3:58. Finished by 4 p.m. Have a good day. Talk to you later. Bye.